Good afternoon, good afternoon. If you could just give me a few minutes before we start. Thank you for everyone who's here. Give us just a few minutes and we will be starting shortly. Let me put some music on in the meantime. Few more minutes before we start today's topic. Um, I will be starting shortly. Just give me a few minutes and I'll be ready to start. All right. Thank you all for being with us, being with me. Lee's not here yet, but thank you for being here today on another wonderful Winning Wednesday. We always appreciate your presence. We always appreciate you joining in. It is another beautiful Wednesday here in Virginia. I love the weather. It's not too cold. It's not cold and it's not hot. Just perfect. And we are about to start. Lee should be joining in anytime from now. But before he comes on in, I can just give you share with you some exciting news. We have some exciting stuff coming up in the next couple of days. So stay tuned on all our social media pages. We will be announcing what the next thing that we are doing for our company. We're excited about that. It's still part of growing with you guys and doing together. So we're looking forward to that. And today, of course, we are going to be talking about how to stack credit or insurance together for that maximum capital. But before we jump onto any of that information, Lee, good to have you. I think you were echoing a bit.
What's that?
I thought I had an echo, but you're good. Go ahead.
No echo over here.
All right, that's
No,
good.
I just want to say welcome to another wonderful Winning Wednesday. And
Yep.
we're excited to be here. And today's topic is going to be about what is it? The sum of its parts. The sum is greater than its parts, right? So it's really going to be a conversation today about, okay, you need access to $150,000, right? You need access to $150,000.
Yeah.
However, you have credit cards that only get you to, let's say, 45. How can you get to the rest of the capital that you need in order to be able to basically seize that opportunity that's in front of you, right?
I
Now we can actually figure out how we can couple things together. And by coupling those things together, we're going to actually be able to get to that point where you have all of the capital that you need for your business. Does that make sense?
Makes sense to me. Makes sense. All right. So today, how to stack credit and insurance together for that maximum capital. You want to start off the conversation, or is there anything else that you want to maybe talk about before we start?
No, let's get well, I kind of sort of in a way gave it away just a little bit that we're going to talk about how to stack credit and use your insurance policy together. But if you have joined us and you joined us last week, we basically did a deep dive into how you can actually leverage insurance policies for your business. You went into key man and how the business can actually be responsible for paying for that policy. And we also spoke about how, because that key man insurance is there, how it is actually an asset of the business, but not of the employee for which it is covering. I think what that is that shows people that there are many, 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 many different ways that you can actually get to the capital that you need for funding your business, whether that's from a startup perspective or if that is because you see that there is another opportunity and you want to go in a different direction, right? So we talked about how you can leverage insurance policies in order to do that. One of the things that I wanted to talk about today is because we're running a special, right? And in that special that we have is I'll give you 30 minutes of my time, right? But in giving you 30 minutes of my time, all that I'm asking for is for you to pay for the cost of pulling an Experian credit report for your business, right? I had two calls over the last couple of weeks, right? And one business, right? They weren't even showing up on Experian. So I was able to search Experian to see if their entity was there, and their entity was not showing. First thing first, that tells me that that business does not have a credit profile with Experian. And definitely, if you do not have a credit profile with Experian, we can show you how to start establishing credit with all of the credit bureaus from Equifax all the way to Dun and Bradstreet, et cetera. We have the tips to get you there, right? But I also
Mhm.
had another I had another conversation with a different business and been in business for a tremendously long amount of time. There was one problem. Eunice, I'll give you one guess as to, well, what was their problem?
I thought you said you're giving me a guess.
I'm giving you one guess. I want you to guess what was the problem that we identified from this one business's credit profile.
um, Probably a mismatch in addresses or something along those lines.
Really close, but not close enough. They
Okay.
actually had two credit profiles for their business, right? So there was credit that was here underneath this one name, and then there was also credit underneath their DBA, right? What they
But
needed
hold
to
on. But was that the same EIN number as well?
same EIN number, but because I don't know how it got started. The business was already pretty tenured, and the gentleman was had purchased the business, but there were two different credit profiles, and we pulled both of those credit profiles, and we're able to see that, yeah, there are lines of credit over here, there are lines of credit over there, but what they needed to do was to consolidate those two reports. And in consolidating those two reports, they would be able to strengthen that one credit profile and get access to more resources at the same time. So you could be doing exactly what you believe that you need to be doing. However, you have to understand what the foundation is and then be in a position to fix that foundation before you can build additional levels on top of that business. And with 30 minutes, because I pulled the report and I review it beforehand, I share it with you, give it to you beforehand so that when we get on the call, we can be in, we can be out. I could address all your questions, and then I could help you to move forward. Right. So now, when you think about, oh my goodness, when it comes to lifting or working out in the gym and you're working out with barbells, do you only work on one arm? It's ridiculous to work on one arm. You have this one arm with all of these muscles, and then you have this arm that doesn't have any muscle, right? So what we want you to do is we want you to take barbells for both arms. We want you to take barbells from both arms and we want you to push them up together. That way you have strong muscles across both arms. And that's where we believe that if you combine your business credit and then you couple that with an insurance policy that's being paid for by the business, you now have access to capital from the business credit lines and loans, but now you also have access to the cash value component of your business at the same time. It's
I
very
love that
hard
analogy. Hmm.
to have a win-win scenario. But one of the things that I learned along our journey was, how is it that you're able to earn money in two places at the same time? And I searched. And the way we got to this story was we had purchased the Alexis, right? We had purchased the Lexus when we got back from Seattle. And it the question that I was bothered with myself was, should I leave the money in the bank or should I pay for the car off completely? Right? So since the money was earning so little at the credit union, right? Even though at that point in time the credit union was giving 2 or 3%, I took the decision that I didn't want to pay interest and paid off the car completely. It would have been a bad scenario if that vehicle had gotten into an accident and been totaled. Then it would have been a waste because the insurance company probably would have only paid us the value, the then value of that vehicle at that point in time. However, if I had known what I know today, then I would have been in the position whereby we would have went and taken that $40,000 and purchased an insurance policy. And then after having purchased the insurance policy, then we could have taken out the cash value from that policy and then went and purchased the vehicle. That's what I didn't know then that I now know. And that was before we ever created VIP. So VIP was still in an idea phase, right? But that's just something that I learned about while we were going through our own journey. And in life, you have to at sometimes be in a position where you need to reflect. So if I was reflecting back today on where we had gone with that purchase, I definitely would have done something different. And I'm telling the audience what it is that I would have done differently if I was in a position that I'm in today. If I had to go and purchase a new vehicle, I would have been able to I would have been able to have that cash value of that insurance policy while also purchasing the vehicle at the same time. And at the end of the day, I'm always looking for a win-win type of solution. And I think that is like a win-win-win solution of them all. I've been doing too much talking, Eunice. It's your turn.
And you know what? The thing about it also is, had you done it then, that policy would have been cheaper for you because then you were still younger. So sometimes I know a lot of people say, well, I don't really, when you talk to young people, they say, I don't need insurance now because I'm young. And
Mm.
then you talk to the more, should I call them senior citizens, who will say to you, well,
Mature,
I don't need, or they're more mature. So you talk to
mature.
mature individuals who will say to you, I don't need it now because it's way too expensive. So I won't need it. So that's a conversation for another day. However, what I'm saying is, had you opened a policy then, that was what, maybe 10, 12 years back, that would have been a way more affordable policy for you because your age then would have been less 10 to 12 years. And when you do think about doing this, don't let your age
Mm.
deter you. You can still
No,
get a policy, whatever age that you are, and you can still start this whatever, whenever, right? There is no right or correct way. The right way really is the day that you actually action on it.
I have to challenge what you're saying there because the message that is being communicated there is that don't let your age determine whether or not if you actually want to go and get an insurance policy. No, your age does determine it because you are going to be the youngest that you'll ever be today. Tomorrow, you are going to be one day older. And the best time to have been purchased an insurance policy was yesterday. So
Yeah.
I have to push back on that one just a little bit because age is a factor. Age is a factor.
Age is a factor. However, as much as it's a factor, that doesn't mean that if you are now in your 60s or 70s, you can't do anything at all. There are many, besides just the specific product, there are many other products that also cater for as high as even 80 years old, right? So there is still that smaller opportunity for you to get into it.
No, I agree with everything that you have said there, and that's the reason why we came together. We decided to move forward with this platform is because we have a strong focus on small business owners, right? We're not actually out there telling you to do something that we have thought about or we've read in the book. We're actually out there saying to you, this is a conversation that is based on real experience,
Yep.
right?
Yep.
We're about 2/3 into today's session, coming up on 20 minutes. But Eunice, just tell them why it is how we got into our initial insurance policy and why it is that you actually went and got licensed to basically recycle our family policies. Share with the audience the story of how we got to the point where you got licensed and what we ran into. You don't have to use any names, of course, but share with the audience how we got to our story.
I mean, for us, we had heard about cash value life insurance and we were excited about it. We said we want to try this, we want to do this. How come we've never had anything prior to when we learned about it? How come we had never learned anything about it? But as soon as we had the information, we had a level of understanding on how it works. And we reached out, we got somebody who was a practitioner who was able to come in, have conversations with us, and set up the policy for us. And we started off like that. And as time went on, of course, we had to review the statements. And as we look at them, we felt like this is not performing as we were expecting. And that took a lot of more reading, a lot of more studying to really understand how this works. And at that point, I also then decided for me to really understand this from an agent perspective, I need to be licensed so that I can really fully understand how this is really set up. And it was only after I got licensed and we had now the training to go look at our own policy, we realized some things were not structured the way we had wanted or the way we had envisioned. And fortunately for us, we were able to um, get into a different policy and now get what we were looking to get. We were able to move from that policy that was set up by somebody else into where I was able to set it up the way that we actually wanted it to. And what I mean by that is our our the way we envisioned it and what we wanted was we really wanted to aggressively grow the cash component because we knew that that cash component for us meant that our business was always going to have access to these funds. So that's where we wanted to focus on, and we wanted most of the premiums that we were putting into this policy to go towards that. However, it was set up incorrectly where most of the money previously was going growing more into the life insurance portion of it. So most of that death benefit was growing more compared to the cash component. And we wanted it the other way around. So we were able to come in and make that correction. And now we have the policy structured such that the cash component is really growing how we had envisioned and how we prefer it, and that has been a lifesaver for our business.
While you were talking, I knew that there was a quote. I love my quotes. And the quote that is here, I'm surrounded all day by different quotes.
Different kinds
The
of
quote
codes.
that I wanted to share with our audience today is only a fool learns from his own mistakes. The wise man learns from the mistakes of others. And I think this was by Bismarck. So let me repeat that. And maybe I am the fool because I had to learn from my own mistakes. Only a fool learns from his own mistakes. The wise man learns from the mistakes of others. But I would say even in saying that, I have learned from Gene Tobridge, right? I
Yep.
have learned from Robert Kiyosaki. I have learned from who else? I have learned from Holly Williams. I have learned from so many other people that I definitely won't make those mistakes all again. So, the reason why we are sharing this message that we're sharing today is so that you can learn from some of the mistakes that we learned. The last one is you got to be very prescriptive about who you do business with. And I was on the phone with one of our clients today, and we were just having a touch point. But he is doing fix and flips around the Baltimore area. And we were just having a conversation, and he was like, the last time we had a check in was in July, June or July, before we went on vacation. And he told me that he was in the process of doing two fix and flips. So when he and I got on the call this morning, I was expecting for him to tell me that those fix and flips were now already finished and that he was going to be putting them online. But he actually told me that the renovations are still continuing and that the properties probably wouldn't be ready until the end of October, right? Which I told him, I asked him this one simple question. And the one question was, does your contractor come into the property and measure, like pulls out their tape and starts measuring the dimensions of the unit, the walls, etc.? Because what year was it when we did Autumn Wood?
2016 or 17?
2016, 2017, when we first started doing our first or second flip, or third flip at that point in time, we had a contractor, but we wanted to test and see whether or not if our contractor was the best contractor for what we were doing with our business. So we then called in another two different contractors, right? And we asked him to give us a quote. Our contractor would walk into the house, and 15 minutes later, because he had economies of scale and he had done it so many times, right? He would walk into the house, 15 minutes, walk out to give you an estimate in 15, 20 minutes, right? Because he already knows that, hey, to do a kitchen the way that we need to do a kitchen is going to be 12 to $15,000, right? He knows that if you're going to do a bathroom, each bathroom is going to be cost between $7,000 and $9,000, right? He knows how much it is to do a floor just by walking the house and seeing, is it 1,200 feet? If it's 1,500 feet, is it 1,900 feet? He didn't have to pull out a measuring stick, right? And I share that story because I asked my client whether or not if his contractor came to the house and measured everything before giving him a quote. If you are in the fix and flip business, right? If you are in the fix and flip business and you're working with a contractor who tells you that they have to measure everything, you need another contractor off the bat. But I'm
And just
sharing this.
to add on to that, he would come in and just look. And even though we always had that contingency, you have to have a contingency. He was always spot on. We've never ran into issues of him saying, "Oh, by the way, the
Hmm.
price have now gone up," and you're caught. You're like, "Okay, what are we gonna do?" He was always spot on.
And even with the first flip, there was a leaky pipe that was coming in from the sewer into the house, right? And every time we went over to the house, there was always this puddle, even if there wasn't any rain. So rather, he knows that it needed to be fixed, and he just dug it out, fixed it, and told us that he was going to charge us an extra $1,000 for it because he knew that it was something that needed to be done, right? He knew that it was something that needed to be done. The reason why I shared that story, because if you're going to have a conversation about cash value life insurance policies, if you go and meet with an agent and the agent is asking you, so tell me what your lifestyle is going to be like if you're lost. Tell me, how much income needs to be preserved, and start asking you all of these lifestyle questions. It's similar to the contractor always asking you to measure this and measure that, right? Yes, those questions have to be asked, but if you're looking to build a policy Specifically designed for the cash value, lifestyle conversations are things that don't necessarily need to be had because the objective is to make sure that it's building cash value first versus the death benefit. Anything you would add to that, Eunice?
Spot on. When you do have those conversations, right? Of course, when you're on the receiving end, you may just not know. But what's important is to make sure that what you have in mind is fully communicated to ensure that even when you have conversations, what you're going to get as the product is what you had in mind.
Hey, at that point in time, I think we had read one or two books. We had read, Nelson Nash and Becoming Your Own Banker. And we got the idea of this from George Antone with one of his books, either, The Banker's Code or the Wealth Code. But we had educated ourselves. It wasn't like we just read one book and ran out to start doing it, right? We didn't even at that point in time know the things to search in Google for. And at that point in time, there wasn't a chat GPT where you can put in a silly question and get a semi quasi solid answer. But
Yeah.
we share that message and we share that story with you because I found a better quote, my wife, where I don't have to call myself a fool. Any fool can learn from his mistakes. A wise man learns from the mistakes of others. And that's the reason why we put together this forum, is so that one, you could know that, hey, if you are looking to build something, go to people who have built that same something before, right? Go to people who have built that same something before. And before we close out, we wanted to say again that your business cannot survive if it doesn't have proper access to capital. Your business is going to die. You will be on that side of the equation that says 50% of businesses, and the number could actually be higher. 60% of business do not survive to their fifth year because they aren't structured and built on a solid financial foundation. So if you are starting up your business, that's the perfect time to get in touch with us so that we can give you the formula and the recipe to build your business initially on a solid financial foundation. But I want to send out a second message to my entrepreneurs, brothers and sisters who are out there. If you've been in business for some time, you've been denied for credit when you tried to only use your EIN number time and again, time and again, time and again, but you don't have an understanding why. I say invest 30 minutes for $99 with me, where we will pull your Experian credit report for you and we will tell you what is wrong with it. That way, when you start building, you're not wasting any further time, but you're building your business the proper, correct way. I don't want to be too much of a Debbie Downer here. I just want to let you know that our mission is helping business owners turn stress into strategy, right? And we want you to not only survive, but thrive past year 5. We're here to help you. You have to come to us, right? We're putting out this information and contact and content so that you know that there is another path. I've been preaching too much, Eunice. I'm going to
Yep.
give you the last word.
It's time for us to get out of here. So
Yeah.
thank you all for joining in on our session today. If you have any other questions, if you want to have a conversation, information is right there. Um, Sign up, contact us, and we're always happy to have a conversation. Other than that, we will see you again next week on another wonderful Winning Wednesday. Have a good afternoon.
Bye bye.